Hello, everybody. Hopefully you can see my screen share here. I'll take you through a brief presentation on Credit Kudos. First of all, I'm David Fletcher. I'm Head of Commercial here at Credit Kudos. Thanks for the panelists on the fireside, really engaging chat on financial well-being. And especially a thank you to Ian, who's made my life easier by advocating the use of transactional data in improving credit scoring and credit worthiness decisions. So at Credit Kudos, we have two missions. Our first mission is to really unlock lending opportunities within the UK and European economy that have previously been overlooked by utilization of traditional credit scoring. And in combination with that, we have a consumer-facing mission, which is to help consumers access fairer credits with responsible finance that can be afforded. And how we do that is essentially through the utilization of our technology and platforms and insights and products in the financial services community. We're a credit reference agency. We were the first in the UK to combine the use of transactional data or open banking with loan outcome data. So we can better track and understand how someone's relationship with their finances on a day-to-day, week-to-week, month-to-month basis is going to impact their propensity or ability to repay any new financial commitments. Essentially, what we do is we take and manage the consent process of people sharing their transactional data with a financial services institution. And we turn that raw transactional data of people's income and expenditure into data points, insights, scores that enable better and faster decisions. We've worked with a bunch of the biggest clients in the financial services space over the last 5 years. And we've driven significant value in both operational efficiency, reducing defaults, and increasing acceptance rates as well. A few of our main use cases that we sit to achieve very much sit around income verification, how we can very simply improve the process of verifying somebody's income. This is especially important when you look at non-standard income, self-employed, gig economy, zero-hour contracts, all the way through to small to medium enterprises who potentially earn their revenue in slightly different ways, such as dividends or transactional income. We also combine our view of people's expenditure to come up with a really accurate view of affordability. Within the UK market, there's a significant focus from the regulator on making responsible lending decisions through accounting for affordability, making sure that when a decision is made, that person can actually afford to repay that new loan commitment at the end of the next month. We also leverage our insights in loan outcomes to identify and understand risk in transactional data. We've done a lot of analysis and insights into how different transactional behaviors can potentially influence the propensity of someone to repay. Through our technology, we can reduce fraud by understanding the identity of the individual contracting with, and also we're able to monitor the individual as well. So we can start looking at early warning signals that exist to maybe reduce balances or reach out to customers who are having financial difficulties. The technology platform is off the back of the Payment Services Directive that came out in 2018, 2019, wider known in the UK as open banking. We essentially do the grunt work at the front end of connecting to the range of bank accounts and savings accounts and credit cards that exist in the economy. We manage the user experience for consent management, and we also manage all the T's and C's and privacy around that so we can make sure the data is being shared with full customer consent and knowledge. Secondly, we deploy categorization so we can understand exactly an organized view of what that transactional data is trying to say. We utilize machine learning and natural language processing to try and uncover exactly what is being spent on and being earned by that particular individual. And finally, from an enrichment perspective, most of our IP and product and data science is spent on actually how we can uncover new insights and scores within that data to make better and faster decisions. This could be as simple as looking at something like a liquidity score for an individual where we know what behavior leads up to a liquidity event where somebody cannot afford to repay a new loan. And we can model that on new data that's being contributed so that we can give an understanding to a lender of what are the likelihood of someone remaining positive in their balances. I wanted to share with you a case study we ran with a proof of concept for a major credit card provider. They had a hypothesis, which was that they were overlooking opportunities for lending in the marketplace. They were spending a significant amount of money on marketing to draw people through to their applications and turning those people away through the utilization of traditional credit scores. We tested the hypothesis that transactional data could be used to identify good credit risk customers in that cohort. And after a 6-month process of looking at the transactional data and behaviors, as well as the repayment performance of those customers, we were able to identify to an accuracy of 90% good and bad repayment performance in a previously declined population. Hopefully everyone can understand that not only that is a great business case for an organization to increase their lending, but also helping to serve populations that previously have been overlooked. Thank you very much.
Great, thanks, David. A few questions here. First, what data do you use in order to assess financial health?
Yeah, so we take the transactional data of people's income and expenditure. We aggregate that into a categorized view of their income and expenditure, and then we can create insights and scores on top of that. So from a risk perspective, that could be anything like their propensity and proportionality of gambling or loan repayments that they existing have against their income, all the way through to their income sources that they have, from benefits to pensions income, rental incomes, or PAYE. All of that comes together and we build out a risk scores and affordability scores that our clients can use in their decision making.
Okay, so how about the models on the willingness to pay?
So we have some standardized models across the wider population, but most of our work is really working with clients in their particular populations. So we'll work with people in prime, subprime, motor finance, mortgages, personal loans, each of which will have a slightly different demographic and different population. And what we can do is once we've deployed the solution, we can learn from the outcomes of the data we're collected to try and build more sophisticated models on those specific demographics.
Perfect. Well, great. Thanks for joining, David.
Thank you.